Okay, let's have a look at the Euro US for the 2nd of December. Okay, first active trade. This is where the market kicked off for the day. So the start of the channel, and the market whips down, pulls you in, and the baseline assumption for your take profit, there's the channel it came from. That would be my take profit. However, you've also got this bounce point here, and we'll consider those 2 points when looking for an entry order for a short. But for this point, we'll take profit there, which is 18.9, so 17, let's say 17 pips in the first push. Now, once again, the entry order is going to be somewhere between there and C-click there. Okay, so let's have a look at the last micro channel to give us an idea of the proposed entry order position there. Alright, so X click to put a horizontal support line. I'll hide that channel. Now, market doesn't do too much in this drift. We're looking once again for a pivot point. There's one through here. So C click, then the market pulls back to this level. So our take profit is through here. Now, you could take it off to this level, be a bit more conservative, up to you. 19.8, so 18 pips brings us to 35 pips. We have, as said, an entry order right there. I'll hide the channel. Once again, market moves up, where initially C-click the low. We're initially hopeful of that. Market pulls back to there. Take profit is set at 16.4, so 15 pips. That brings us to 50 pips so far for the session. Now, as I said, we're looking at the market going back through here. You could have an entry order on that high. I tend to use the shoulder just to give myself a little bit more of a chance of getting the trade. As you can see, that if you had your entry order on the high, it missed it by 2 or 3 points, and you miss out on the opportunity. So we'll use the shoulder. You could even use that shoulder. Either way, it's there's only a couple of points between the two. Your risk is relatively low. As soon as you take the trade, actually, I'm going to clear that off. X click to give you a horizontal support and resistance line. And now we're looking for a take profit. Normally, you're waiting for a double channel. You're looking to see some form of pullback after a channel is met. Problem is, parabolic moves can have parabolic returns. It's rare that they just go straight down, then straight back up. They should comply with the channels, but because it is a non-standard move, I would close out there. Right? As soon as that candle closed, if you're at best, you'd wait for this low through here to be reached again, but I would counsel taking profit and then coming back the next day. You're not sure what the market's going to do. Okay, let's have a look how the channels are impacted. I'll just take it from there. Now, standard assumption would be it's going to double. If it broke the European session's previous low, which was there, it should go down to about here, which it does. All right, you can see the pullback is to there. So click that. That would be your next trade. That would be a normal take profit scenario had it not been for a parabolic candle here. Fundamental announcements are like that, but from our perspective, we trade a normal operating market, and that's not normal. So take profit, get out, come back the next day. 25.6 pips, so 24 pips brings you to 74 pips for the session, and we're done and dusted. Okay, let's see what happened after the parabolic move. Nothing. They've reached a price point. That's it. Game's over. Wait for New York. There should have been a fundamental announcement of some description. Okay, there you go. A big tank slap. Market goes a little lower, but there's not a lot of opportunity after that parabolic move. Okay, hope this has been helpful.